me, Dale?
Got you, Brent.
How are you doing?
Good. Thank you so much for. I know you're in the same time zone as me, Brent.
Oh
So
yeah, no worries,
yeah,
no problem at
I
all.
I appreciate you getting up and beating the roosters up today. So great
That's
to have you back. I really respect your work and our interview that we had before was informative. Have you used Zoom before? Because you could share
yep.
your screen. Okay.
I have. I don't know if I have a lot. I don't didn't really prepare any slides, but I'm
Okay.
happy
Okay.
to.
All right. Then I could share mine
Okay,
and we can talk. So,
sure.
um, what I recall, and some of the things that you've had to repeat to a lot of different people, is that you're a precious metal bull and you're a
Yes,
dollar bull. Am
yes,
I correct on that thesis?
that is correct.
All right. So, a lot of people have a hard time understanding that. And a lot of people, I think, it'd be with what the Fed has done recently, Brent, with throwing tsunamis, waves of cash at the system, and then fiscally throwing trillions of dollars to in relief for the shutdown. Most people conventionally would think, wow, it's going to end up just crushing the dollar. So, in lieu of recent events, is your thesis about the dollar shortage still intact despite what the Fed has been doing?
Absolutely, and I think if anything, it's gotten even bigger, and this coronavirus, issue that we have has made the problem even more acute. And so the main thing I think that most people forget when, especially when I speak to people in the precious metals world is that, again, it makes sense. If you print a lot of something or if you increase the supply of a lot of something, then the price should go down. It makes intuitive sense,
Right.
so the people that have done this analysis and come to this conclusion, I'm sympathetic to that view. The issue that I think many forget is that fiat currencies trade relative to each other. And if you want to do analysis on the United States and the debt problems and the amount of currency we're printing and all that kind of stuff, that's great. But if you only do it on the US, you've only done it on one side of the equation. You also have to do it on, against the euro or the Swiss franc or the Australian dollar or the yen. And the reality is that all those countries have the same issues that we do, and in many cases it's worse. And then you also have to remember that they don't have the advantages that the U.S. dollar has, from being, we've got the deepest capital markets. We've got the advantages of being the world reserve currency. The U.S. dollar payment system through which global trade takes place, and not the least of which, I should mention, is the U.S. Navy that enforces its use. And so, I think that's largely what's driving this is the fact that there's despite the increase in supply from the Fed, it's still overwhelmed by the incredible demand for the dollar. So,
What are pipes, Brent? I've heard, some guys I mentor, I'm, pretty much a technical guy. And they talk about pipes from like emerging market economies, that's also part of it, dollar denominated debt, which is also creating demand for the dollar.
yeah.
Um, with what's happened with the virus, you say it's actually exacerbated the case for a bull market in dollar. And just to give
Yeah,
people,
sure.
kind of an idea of how bullish a dollar you are, you're not
Yeah.
just like a 104 Dixie guy or a 107 Dixie guy. What's a number that you think is probable?
Well, I think 120 will easily happen, and
Okay.
I actually think that we'll go back to its all-time high in the 50 area, and
Okay.
I don't think we'll necessarily go there and stay there, but in
Right.
some kind of a blow-off top, spiking scenario, that would not surprise me at all.
Is that going to
Essentially,
happen during risk off and all other asset classes under pressure? Kind of a deflationary spike with that
well,
happening?
yeah, I mean, I think it would be deflationary on a global scale because at the end of the day, a spiking currency through which all global trade is denominated in, that's typically not good for asset prices. I think you're better off on a relative basis being in U.S. dollar assets versus assets denominated in another currency. But in general, it would likely be a risk-off scenario. The thing to remember is that when comparing currencies, and again, this is more of a structural and fundamental view. This isn't necessarily a technical view, right? You do great work on the charts and the short-term trading and the channels and levels of resistance and levels of support. This is more of a year to 2 to 3 year play,
Right.
just based on the fundamentals. The key determinant is the amount of dollar debt in the world, and it's not just the U.S. dollar debt. I mean, we all know that the U.S. is, what is it, $25 trillion in debt. And that's a huge number and it's a huge problem. But the bigger problem is there's almost an equivalent amount of U.S. dollar debt issued by entities outside the United States as there is inside the United States. And they do not have the ability to print the currency when you get into a bust, right? So when we get into these booms and these busts, the Fed comes riding in and recollateralize the system. You can think of it like a trading and a margin account. When you buy on margin and the assets go up, it's no problem. And that's kind of what they do in the global monetary system. People borrow money, they invest it in assets and businesses and different ventures. And as long as prices are going up, it's fine. But when asset prices start going the other way, you get a margin call. And so what does the Fed do? They come in and they recapitalize the system by putting new money into the account. Well, that same issue ends up happening outside the United States. But the problem is the foreign central banks don't have the ability to recollateralize the system because they don't have the ability to print dollars or to issue dollars. And so we've gotten into a situation where in order for the system not to crash, the Fed will have to bail out the rest of the world. And I don't think that the Fed will bail out the rest of the world. And I don't think, and even if they were to want to, I don't think that they have the capability to do it. In theory, they have the capability to do it, but politically, I think it would be very tough for them to bail out Indonesia if people in Indianapolis don't have jobs. I think it would
Great point.
I think it would be very tough for us.
And they kind of rhyme, Indianapolis. And
yeah. I did that on purpose.
Yeah, I like that. And so with this type of scenario, how do yields come into play? Because, we had that big blow-off move in bonds. It took TLT to 180, and then they one of the biggest drops. I've been watching bonds for many years. One of the biggest drops that I've seen, and that's when the Fed really had to come in because they had locked up. The credit markets have locked up. To me, it looks like yields. I know a lot of people are talking zero on the 10-year. But to me, it looks like the 10-year is turning and threatening, and the 20-year bond may have some problems if this is a failing rally. What do you think is going to happen with rates? Could bonds also fall prey to a liquidity crisis where rates go up not because the Fed is tightening and not because of economic growth, but just because supply is so great and there's not a lot of demand? So to roll it over, you have to keep paying higher yields. Could that happen?
I think that could easily happen. But what I will say is that in my opinion, the idea that the U.S. is going to be unable to fund the U.S. government while Europe will still be able to fund their governments, and Australia will still be able to fund their governments, and Japan will still be able to fund its government, I think is wrong. So I think the point you're making is a good one, and I think yields could rise on counterparty concerns. But if that happens, I don't think we get into a situation where yields are rising in the U.S. but staying at zero or lower for the rest of the world. I think we will get into a situation where the United States is the lowest yielding major sovereign again. Now, whether that's because the U.S. goes down lower or because the other sovereigns, start to rise on the same types of concerns, I'm not sure. But on a relative basis, I would expect that traditional relationship to reemerge.
Okay, so know your views on the dollar. and long-term gold bull. We
Yeah.
did put in a nice little reversal day. We have a possible little reversal week and hit some of my targets. I mean, technically we had a triangle and we've broken out of it. And I guess as long as we stay above 1720, you could go look for higher levels, but
Yeah.
it might be a fake out breakout if we start taking that out.
Yeah.
What are your views here? I mean,
Yeah.
I know that you're one of these gold guys that doesn't think it's always right to buy gold at
Yeah.
any level.
Right.
What are you
And
thinking in here?
well, I'm not buying gold in these levels, and listen. I'm not telling everybody to go out and sell their gold. I think gold's a crucial part of a diversified portfolio, especially in times like this.
Right.
But I would not be adding right here. If you don't own any gold, then yeah, I think you should probably just buy some. It doesn't really matter what the price is. But if you're
Yeah.
if you're looking to get a big allocation, I wouldn't go out and just buy it all right now. I do
What would?
think I
Oh,
sent
go
out a
ahead. I'm sorry.
tweet. No, sorry, I sent out a tweet last week, somewhat jokingly, but also serious, saying that you could see, and I said you could see 3 years worth of gold action in the next 3 weeks. And what I meant by that is, you're showing this little mini breakout here, as I was expecting that to happen. But I personally don't think it's sustainable. So, but I saw some things that made me think that gold might spike higher. We got that spike. It still wouldn't surprise me if it goes even a little bit higher than this. But
1690 maybe.
yeah, yeah,
I mean
or
1800. Yeah.
yeah. I test the 1800 level wouldn't surprise me at all. But
Yeah.
then I do think that as we get into early June and maybe even July, we get another pullback, and then we just kind of gotta wait and see from there. This
What
sentiment is
level would you say be attracted to put new money into?
well. I think if
1350.
yes, around 1350, and then the other thing is that if we can get to like the 1800 level and stay there for a couple of months, maybe
Yeah.
that maybe that's it. Maybe I
Yeah.
would change my mind a little bit. But just with the way things are right now, um, and we saw what happens in a spiking dollar scenario, and it didn't even spike that big. But when the DXY went to 104
Yeah.
back in March,
Right.
all assets got liquidated, even gold. I think gold dropped 150 bucks in a couple
Yeah.
days or
Yeah.
a couple weeks. And
Yeah.
again, I don't think people wanted to sell their gold. They had to sell it to meet margin calls, right? And
Right.
I think it's possible, because if you look at and a lot of people in the gold world hate it when I say this, and rightfully so. If you look at the commitment of traders, positioning, the commercial short position is still very large. Now it's come down a lot in the last 6 months, but it's still very large. And as a percent of open interest, the commercial short position is as big as it's ever been. And
Okay.
that means that the speculators are as high as they've ever been, as a percent of OI. And what that and like it or not, gold is priced in the COMEX, or in the futures market. And all of those traders trade on high levels of margin. That's just the way futures work. And so when you come in and you buy a bunch at these lofty levels, and then it goes against you, these speculators, because they trade on such high margin, they have to liquidate. And when it starts going through against them and hard, it creates this vicious move to the downside. And so those are just a couple of the indicators that I look at that tell me to maybe just be careful, and that
Okay.
maybe it isn't the time to throw everything into it.
All right. The other big feature that really gained momentum over the last few weeks, and it's something that I've been talking about for a while, but finally has been manifesting in a pretty big way, has been the gold silver ratio here.
Yes.
Back in March, you got for 1 ounce of gold, you got 124 ounces of silver. Now we're
Right.
back near the 100 level. Um, any view on this? Is this a correction and gold could take the lead again, or
Yeah.
could this be a major turn?
Well, I'm glad you brought this up, because it's a really interesting. This is a chart that I have been following for years and years, and
Oh, yeah. So then you're like me. You remember when it was
yeah,
40?
yeah. Well, and then
Yeah.
if you look at this red line that you have in here, I remember several people, excuse me, several people would tell me, that's the resistance, that's the time to buy, because That's, it's very close to the all-time high. And every time we hit that, then silver rallies. And I kept saying, I think we're going to break through that. And if we break through that, we're going to go back to an all-time high. And that's exactly what happened.
Yeah.
Um, and I actually thought, so silver it was mostly because silver got killed more so than gold, right?
Right. Right.
Silver, gold had that pullback, but silver just got crushed.
Right.
And so now I think we're kind of retracing. I think if we're going to, if I think silver really needs to get below this red line again and stay there. If we were to get below that red line and
This
then
one,
come,
Brent, right
yeah,
here.
yeah,
Okay.
down in that
Yeah.
area, the
Around
88 to 90.
90.
Yeah.
Yeah. Okay.
If we could get back down below that and then maybe come back up and retest it and start going lower again, then I'd say, that's a pretty good signal.
But, I look at this, and it's one thing I teach is when you have highs where momentum is
Yes.
confirming the high,
Yes.
but it's not a high. It could be a top, but usually it's not the top. There's always
Yeah.
exceptions. That maybe, so I could kind of hear it in your voice
Yeah.
because you wanted to negate this breakout.
Yeah.
That if all we have here is this was 20, and from 116, equality's 96, where this could just be corrective, and
Yeah.
we have another big
Yes.
rally again.
That's right. That's right.
Is that kind of in the back of
Yes.
your mind?
Exactly. Exactly.
Okay. See, we're a kindred spirits, Brent. Brent, yeah, I really appreciate you being here. Any last thought in the middle of, this pandemic has been a little easier for me to trade than the last one because I didn't have a computer in
Yeah.
1918. But you have any feelings as far as the virus?
Well,
You
here,
know,
here, I'll just leave people with this. And, before this whole virus broke out, I was saying that we were headed towards a currency crisis. And I think one of the reasons was that with the increasing amount of debt, the velocity of money was slowing down lower and lower and lower. Well, the coronavirus just brought the velocity of money to almost zero.
yeah,
And, and all of the stuff that has been put in place in the last 2 months to combat the coronavirus has just made the overall problem bigger. In other words, the amount of debt and the amount of bailouts and that kind of stuff. So the problem is still out there. Velocity of money needs to be much higher than it is to avoid this currency crisis. And I just don't think we're going to have it. So I would just say, again, you do a great job with the charts. I don't really have anything to add to those, but from a fundamental basis, the demand for dollars outside the United States is incredible. The demand for euros outside of Europe is not really high. The demand for Brazilian reals outside of Brazil is not really high. The demand for the Indian rupee outside of India is not really high, but demand for dollars outside the United States is extremely high. So don't just focus on the supply, focus on the demand as well.
I would like to. I would love to see you and Peter Schiff have an interview debate together. I'd love to line that up. So,
Yeah.
Brent, I really appreciate your insights and being able to stand up against traditionally what's happening in your arena of everyone being a dollar bear, and your patience for having to explain what you talked to us about today over and over and over again. I suggest that you listen to Van Morrison's song, Why Do I Always Have to Explain? And
Well,
wish you and,
yeah,
huh?
I'm happy to help people, and that's probably why I try to do it. If we can save a few along the way, it'll be worth it.
Yeah. Well, thank you, my trading warrior brother, and I hope that you and your family remain untouched from this thing, and that you have a great summer trading season. We could hook up in the midst of the dollar blow off and talk about it.
Sure. Anytime. Thanks again for having me.
Okay, everyone, that's Brent Johnson, and you could follow him on Twitter. His Twitter handle is at Santiago AU Fund. And that's a wrap for Turnaround Tuesday, everyone. We'll see everyone tomorrow. And have a great day trading. And I'm going to just end this. Adios. Thank you again, Brent.
Thank
And
you.
also, oh yeah, I forgot. Don't just count your Krugerrands and your Eagles and your bars. Count your blessings. See everyone tomorrow. Adios.